Good morning. You're watching Businessworld Live. I'm Danie Laurel. It's the start of a new trading week. Let's kick off with our banner story. The Finance Department says it is seeing signs of recovery. That's on the back of improvements in merchandise trade and manufacturing activity. Data from the PSA showed that merchandise trade increased by 0.6% to $12.9 billion in February, while the manufacturing sector indicated expansion in the first quarter as measured by the Purchasing Managers Index. While the DOF said the improvements signify recovery, COVID-19 and its variants still pose downside risks. The DOF said the spread of the virus has to be contained and its risks managed, otherwise stern measures will be implemented again and recovery will be impeded. Overseas, Japan-based rating and investment information is also painting a better forecast for the Philippines. The Debt Watcher has maintained its BBB plus credit rating with a stable outlook for the Philippines, citing its strong growth prospects post-pandemic. RNI said the Philippines has the potential to bounce back from a 9.6% plunge in 2020 on the back of investments coming in and accommodative fiscal and monetary policies. RNI said the country's fiscal standing was manageable, that's despite higher spending and increased budget gap during the pandemic. Bangko Sentral Governor Ben Diokno welcomed the rating as a vote of confidence in the country's ability to recover from this health crisis. Okay, guys, welcome to Monday. Some positive news on the banner there and more positivity when it comes to markets to start your Monday morning, at least offshore. You can see on my terminal here, stocks are set to kick off the week on the front foot in Asia. That's after the strong U.S. earnings last week and even over the weekend added to evidence of the recovery from the pandemic there. You also had some economic data in the U.S. In positive territory. The new home sales rebounded in March to the high since 2006, while the output at manufacturers and services reached a record high in the month of April. Now, there's also going to be a Fed meeting this week. Policymakers over in the U.S. are saying they are in no hurry to withdraw their support even as the U.S. economy rebounds. There's also a GDP forecast. There's going to be, at least expectation is a robust 6% growth in the first quarter. And another one that I want to take a look at, let's take a quick peek at how Asia is opening here. China's economy continuing to boom. That's after they have seen a record first quarter. Now there is a early indicator index among the small and medium-sized enterprises, which is created by Bloomberg, and that combines 8 early indicators, and those remained unchanged from March. They were in strong expansionary territory, increasing confidence in a survey conducted by more than 500 companies by Standard and Chartered. You can see Japan here a little bit mixed with the Nikkei 225 up a touch, but the Topix is still down. So let's take some time for them to percolate. Now let's take a look at our own open. Seems to be the case that we are following suit, at least for the time being, although we are still at 6,400 levels here. We are up nevertheless by 0.4% since Friday. Nevertheless, 2TradeAsia.com is expecting the index to trade between 6,200 to 6,600 this week. Now recall that last week we had fallen by 1.8%. We had value turnovers declining to 5.5 billion on average. Net foreign selling also being sustained at 880 million pesos a day. Now, what is in focus this week? Of course, the vaccine progress, but also first quarter earnings results. We're going to be expecting Aboitiz Power and Meralco to report their first quarter earnings today. Now, this according to Nikki Franco, the head of research of Abacus Securities. The upcoming IPO of Monde Nielsen, which has already been approved by the PSE, would likely sap liquidity from the market until the listing day, and that tentative listing date is on June 7. Now, finally, let's take a quick peek at the banks here and how they are opening. That's amid some mixed sentiments here. On the one hand, the Banco Central is saying that the banks are expecting improved demand for loans from enterprises as well as households in the second quarter. That is based on a survey of senior loan officers. Now, recall we had reported that BDO posted a 19% jump in first quarter profit. You've also got Union Bank first quarter profit rising 80%. But you've also got on the downside, Deputy Governor Chuchi Fonoshare saying that the NPL ratio of the industry may breach 5% by the year end, but also that the FIST law, which was signed in February, will help the banks and bring this down by 0.63 to 0.71 percentage points. She does say, however, it's still very difficult to assess the impact of the lockdown. So here to chat with us on what to look forward to when it comes to trading, we have with us Rastine Mercado of Chinabank Securities. Good morning, Rastine, and welcome to the broadcast.
Good morning, Danie. Thanks for having me.
Okay, Rastine, it has been a while since we've opened the markets quite positively here, and there's a lot of happiness and euphoria when it comes to offshore and what's going on and how those economic data prints are coming out. Is it just a matter of time for us here before we start feeling the same sort of optimism?
Well, generally speaking, a lot of this optimism and funneling down into improve economic prints. So this is mainly driven by higher confidence and higher activity in the economy driven by your vaccinations, right? So for the US, you've seen them reach a milestone of having been able to inoculate a lot of people already at this point. If you look at it, last year the concerns were that a lot of these foreign markets, or ourselves included, actually were trading at expensive valuations, right? So it's not right at this point to think that the global liquidity is going to look for cheap markets at this point. If you're looking at it, MSCI World constituents are seen to grow their earnings on average by around 68% year on year this year, right? So for the Philippines, it's somewhere similar, right? But then in the Philippines, you see the prices lagging. They're actually going down, whereas in other markets going up, right? So I think in terms of expectations, what's happening is that expectations for earnings in other countries is actually being revised higher, whereas for us, it's still flat, right? So I think first quarter earnings, as you said, will potentially be a market catalyst for some of these issues.
Okay, when you're looking at the index levels now, Racine, can you say that they are mirroring the economic expectations, or is it still cheap compared to what some of you are expecting? And there's just a lot of fear when it comes to picking up these equities, or will you say that it's actually not necessarily fully valued, but fairly valued with regard to the expectation of the economic recovery?
Well, if we're talking about valuations, right? Currently, in terms of rolled over expectations earnings, we're still flat from the start of the year. So analysts really haven't revised their estimates downward or upward. In terms of PEs, we're currently at 17.5 times 2021 earnings versus your 5-year average of 18.1. So on the money, it's fairly valued at this point, right? But what the market might not be pricing in really is if there will be some earnings revision downwards, then that might increase selling pressure in the market more than what we're seeing now. So hopefully that's not the case, because at this point we're still seeing recovery in the second half as our vaccination program kicks into high gear with a target of inoculating around 70% of the population by the end of the year.
Okay, so for you, still some risks tilted to the upside there if the vaccine rollout does become important. Now, let's talk about the banks here. I know that you can't really comment on specific banks, but just in general, it's a mixed picture because the non-performing loans seem to hit 5% by the year end, but also them saying that the second quarter will be better when it comes to loan growth. Will that loan growth offset at least this NPLs, and have the banks already put aside provisions to cover that in 2020?
Well, a majority of the bigger banks have provision. Just some were preemptive in nature. In terms of coverage ratios, we're still good. Banks have actually been guiding NPLs to kind of peak somewhere around second, third quarter to the second half of the year. In terms of loan growth, we're also seeing that kind of recovering into the second half. But then if you look at it, a lot of it is really contingent on how our recovery is going to play out. Right? At this point, we're kind of in limbo. We're not sure where the economy's at. I think that's why we're waiting for consumer confidence figures and first quarter GDP and first quarter earnings for corporates, right? So hopefully the imposition of ECQ in the first and second quarter didn't affect outlook that much. So hopefully we do get back to that recovery story and the expectations for profitability growth year on year towards the second half.
Rastine, quick comment on the first quarter print of the banks. Quite a mixed bag here. You've got all the way from negative territory all the way to 80% of a jump in earnings. What's going on here, and what does this say? Does this even say anything? Can you generalize the performance of the banks in the first quarter?
Well, some did adjust on the base of create, right? So some book losses regarding that. But in terms of general observation, so weakness in the core lending business, partially offset by fee-based income. So that's what we're seeing kind of across the board. So at this point, so hopefully towards the second half, you see loan growth kind of helping buttress the growth year in year. So again, it remains to be seen whether that comes into fruition or not.
Okay, let's move over to the property sector. Quite some news here, actually. In terms of, well, first of all, let's focus on residential. You've got Ayala Land banking on that $2 billion on home projects, saying, 100 billion pesos worth of residential projects just this year on the back of a V-shaped recovery. What is driving that, especially with the vacancies that you're seeing with tenancy rates dropping, at least in the central business districts? Why bank on this right now?
Well, I think they're really looking ahead into the recovery, like over the medium term, around 3 5 years. Some segments in the residential property space were actually quite resilient in 2020. So these are luxury home units. So again, we had seen some pause in building in 2020 due to the pandemic and the quarantine period. So the expectations of recovery through the next 2 3 5 years should supply should be there by the time that picks up, right? So in terms of your environment, you're still in a low interest environment, right? So that's kind of conducive for people looking to purchase homes. So I think they're really just banking on that recovery and the availability of cheap credit to kind of fuel the demand over the medium term.
Do you feel the same way for commercial real estate? Will that see a rebound in the near term? You've got the AREIT, actually, they're saying that they will be investing even more, identifying new assets, expanding into more business districts. And they're saying that the office leases are not, going to be that bad. They're expecting the global outsourcing to continue. Philinvest land as well, building 11 offices, 240,000 square meters of gross leasable area. How does that fit into work from home and tenancy vacancy rates in terms of offices and even the POGOs leaving the country? Why this investment still in huge capex when it comes to offices?
Well, I think again, looking towards the future where you're seeing a recovery and some offices or some operations moving back into real office spaces. So it's really having the supply down the line to be able to accommodate the surge in demand. So part of the surge in demand might be attributable to foreign locators moving into the Philippines after the overhang from Create was lifted. So if we recall, a lot of locators were really lukewarm in considering investments here because of that overhang. So hopefully now that's resolved. We do see that surge coming in terms of POGOs. I think the industry has consolidated and we're potentially seeing less declines from that space. So it's really a recovery story from this point onward. So hopefully that will fuel the rise in occupancy rates for these properties.
Do you have any favorites? Last question here, Rastine. Which ones should we be focusing on? Are you going to be looking at the ones that are more retail-oriented, commercial-oriented? And as you mentioned, office spaces, because it might be the time to be entering if they're down in terms of stock prices? Or are you looking into the ones that are still performing well and focus on residential, as you mentioned, that's still being buoyed?
I think if you're looking down the line, there is more importance on recurring income. So I think that's why you're also seeing a surge of REIT listings at this point, right? It's because they have this income that's consistent throughout the forecast horizon. So I think it's really just which do you value more, right? So at this point, what the market's valuing more is consistency and a little bit of conservatism, and that's what you get with leasing assets.
Okay, so looking towards the future, a bit of a long-term horizon then when we're looking at the property segment. And as you mentioned, recurring revenues is key. Thank you so much, Rastine, Mercado, Chinabank Securities.
Thanks for having me.
Here are the other headlines. We're keeping our eyes on the global shortage in semiconductor chips is causing supply chain pressures among local electronics manufacturers who are forced to take on higher costs to meet client demand. SAPI President Dan Lachica said the shortage may be good for the export business, but capacity is constrained due to long lead times of equipment deliveries. This has left local companies with no other choice but to pay higher operational expenses as they race to meet an unexpected rebound in demand after vehicle sales fell last year. Taiwan Semiconductor Manufacturing, the biggest company in Taiwan, earlier warned that the global semiconductor shortage may persist until 2022. Restrictions on Chinese access to American technology amid tensions between the two economies had also prompted China to stockpile semiconductor chips. Now, the Philippine Star reports that the Trade Department is investigating the possible imposition of anti-dumping duties on cement imports from Vietnam. In a notice, Trade Secretary Mon Lopez said the department found sufficient basis to justify the investigation following applications from Cemex, Holcim, and Republic Cement Builders. The applications allege that cement products are being imported from Vietnam at lower prices, which affects the local industry. Despite the imposition of the safeguard duty, the DTI says that the total volume of alleged dumped cement imports from the Southeast Asian country amounted to over 1.5 million metric tons from January to June of last year. And restaurants will be allowed to increase outdoor dining capacity to 75% under general community quarantine. Indoor dining, on the other hand, will be allowed to operate at 50% capacity also in GCQ. That is according to the latest memorandum issued by the Trade Department. In areas that are under MECQ, like Metro Manila, restaurants are permitted to open up to 50% capacity for alfresco dining, while indoor dining remains prohibited. Recall that DTI Secretary Mon Lopez said that Metro Manila and nearby provinces could be placed under GCQ next month if they can improve contact tracing and hospital utilization. And that's a first look into the business day. Today is Monday, April 26, 2021. Catch Business World live for the market close. It's at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.